be there. TradingPub will have a booth, so be sure to come by and say hello. We'll get some cool stuff to you. But again, we appreciate you guys being here. It'd be great to meet some of you in person. We've got an excellent event scheduled for today. My good friend Amar is tuning in all the way from the UK. He's going to talk to you guys about order flow and trading and how order flow really moves the market. And basically what you have in the markets, let me ask you this question. How many of you have ever felt like, you're in a trade and you had your stop working and the markets kind of went right to your stop? How many of you have had that feeling before? Every day? Yeah. And so one of the important things is, there's a lot of technical indicators you can watch, a lot of different things, but really, the main thing that moves the market is going to be the order flow of the market, the big players, and understanding where the volume's going. And so Amar has done a lot of research on that. He's going to be sharing it with you, and we appreciate him taking time out of his day, or I guess out of his night. He's located in London, so it's getting to be about bedtime for him. But again, we appreciate him tuning in. I'd like to especially thank my good friend and colleague at TradingPub, Glenn, is tuning in as well. Very late in the evening for Glenn. Glenn joined the TradingPub about 2 weeks ago, so everybody be sure to say hello to Glenn and welcome him aboard. So we'll go ahead and get started here. I'm going to play a quick video, just tell you a little bit about the TradingPub, and then I'm going to turn things over to Amar. He's going to take you through today's presentation. All right, good deal, good deal. Well, again, we appreciate you guys tuning in. Looks like we've got about 200 traders in the room, and so you guys are definitely in for a treat. We will be recording today's event. We'll post a copy on our website, which is tradingpub.com. We'll also post a copy on our Facebook page, which is facebook.com/tradingpub. We actually passed the 40,000 mark today, got our 40,000th like. So if you like the free education we provide, you can definitely like us there. But Amar, at this time, I will turn things over to you. I'm going to get your slides loaded. And real quick, let me pull this up. All right, so you guys should see a copy of Amar's slides. Amar, the room is yours, and we appreciate you being.
Hi Morgan, hi guys. Sound was a little bit intermittent there, so I hope everyone can hear me. Just give me some yeses in the chat to let me know that everyone can hear my voice now. Great stuff. Lots of yeses come through. Thank you for that great introduction, Morgan. And guys, you're in a very fortunate place with TradingPub. I mean, they do some great work for charities, and it's a great place to get some great education as well. So a lot today, but you're very fortunate, like a lot of you I'm sure are probably just starting your trading journeys, to have a resource like TradingPub to learn from and get going with. So good stuff. Before we get started, I've got the usual disclaimer. As I'm sure you know, the substantial risk of loss in trading and past performance is not indicative of future results. Before we get going in the main presentation, let me tell you a little bit about myself. I'm a professional trader. Trading is what I do for a living. I trade on a floor here in the UK, in the City of London, you know, I'm constantly surrounded by professional traders, and I have developed tools and ideas and this type of thing that have come from my own trading, and over the years, you know, those are technical tools that I share with other traders. So that's a little bit of background on me. So let's get rolling with today's presentation. Before we really get started, I want to learn a bit more about you guys. So what do you guys trade? So type into the text chat, let me know what markets are you interested in. Do we have any Forex guys in the room, mainly futures? What do we have? What instruments do you guys like? So we've got some options traders, Forex, binaries. Oh, binaries, good stuff. Okay, so very good mix here. So some FX guys, some futures guys, stocks. Very cool. Very, very cool. So we're going to start this presentation on a relatively basic level, and then we're going to work our way up. I just want to give everyone here a chance to get to the same level, and then we're going to talk about some greater in-depth things. So let's start with the basics. We're talking here, when we talk about order flow, what we're trying to do is talk about exchange-based markets. So the CME is the central exchange for the S&P and quite a few other instruments, and exchange-based markets is what order flow centralizes around. In FX is decentralized, but it has multiple exchanges. So you can get a gauge of order flow in FX in much the same way. And an exchange essentially is a centralized marketplace in which securities, commodity, derivatives, and other financial instruments are traded. It's basically a place for people to get together, for sellers to meet buyers and buyers to meet sellers. That's what an exchange is. And that's kind of the grounding, the foundation of where order flow kicks into place. Now, we've kind of seen over the last 20 years a migration, a move from the pit, which was the physical exchange. And you know, it was a very, very physical place. There was lots of guys screaming and shouting at each other, lots of noise. You know, and I'm sure you guys have probably seen old videos of these guys screaming and shouting and kicking and punching and biting each other's arms and everything else that happens in those places. It's also one of those environments where it was a buddies culture, it was a friends culture. So if you were with the in crowd, you made a heck of a lot of money. You made an absolute massive amount of money because you knew what was going to happen with orders. You knew what was going to happen with the flow of orders, and that's because you were best friends with the guy that was trading, or I don't know, at Solomon Brothers at that time, or Merrill Lynch, or whoever it may be. And these guys were trading massive amounts, and you were friends with that guy, and he'd give you a wink and a nudge and say, look, we're about to throw 2,000 contracts on, 10,000 contracts on, whatever it might be. Why don't you follow us into the trade? So there was some degree of manipulation from the big guys. There was, that buddies culture, helping their friends out and getting them in on a trade, and they'd be suckers on the other side, taking the other side of the trade. But in that environment, in the pit environment, it was easier to see what other traders are doing and follow and hedge against that. And there was a lot of money made. A few of my good friends traded in the pit, like the live pit here in London, and they made money, ridiculous amounts of money. But when the market changed to the electronic format, which is what we're living in now, things became cheaper, they became much more efficient, and these guys lost their edge. They completely lost their edge. My friend who was a floor trader now, has completely changed his profession. He's going to property development with the money that he made from working on the floor, but he just can't trade anymore because the edge that he had completely disappeared. Now, with the electronic market, things are cheaper, they're much more efficient, they're less prone to manipulation. A couple of stars there, and I'll explain why in a moment. But it's much more difficult to see and interpret what others are doing because you're on a relatively level playing field. So the main participants in exchanges are, the institutions, which is large banks, Commercial traders like BP, the big coffee producers, all these guys that are trying to hedge against the changes in prices, proprietary traders, and these are all large traders funded by banks, private equity. These are the big boys, the big players, the guys that really move the market, and they're working for their firms with their hedging strategies, and they're positioning themselves, and some are also speculating as well. And then there's everyone else, which is the average Joe trading at home with a one lot, with a one contract trade, and every other trade in there. All of these guys come together and trade. Now, there's also other participants, and these are the electronic kind, the algos, the HFTs. I'm sure everyone has heard of this phenomenon that's kind of crept up on us over the last few years. High frequency trading, or algorithmic computer-based trading. Some estimates that 70% of S&P futures trading is HFTs or some form of algo. And these are obviously by large firms, banks and institutions who have these incredibly intelligent programmers and mathematicians who put these programs together. Now, HFTs, because they are going for micro scalps, high frequency trading robots are going for micro scalp, they tend to be causing those big volume spikes that you see in markets these days. And those volume spikes offer a great opportunity for profit if you know how to use that type of information. So what's the one thing that all of these different participants, we talked about the institutions, commercial traders, proprietary traders, individuals at home, HFTs, algos, all of these guys, this is the flow of orders in the market. This is my orders, these are your orders, these are Keith's orders, Chuck's orders, Joseph's orders, Sergey's orders, Morgan's orders. Every time we trade in the S&P, the crude, whatever it is, this is what's happening in the market. This is our contribution to the flow of orders. This is our contribution to the marketplace. So I'm just going to pause this. And let's go back to the slides. Sound is gone. Can everyone hear me? Okay, Sergey can hear me. All right, everyone hears me. Okay. Okay, so what exactly is order flow? Order flow is the fundamental result of the market auction mechanism, and supply and demand is facilitated by order flow. So everything that you're seeing, the orders that are taking place in the market, they are facilitating supply and demand, because if you have a demand for something, you're buying it. If you don't have a demand for it, or if you're contributing to supply, you're selling it. So all price action is basically a product of order flow. So the peaks and troughs that you see in your charts, it's a product of order flow. And price discovery, the movement of price up and down and everything that you see in the charts, is powered by cumulative order flow action. This is what drives the markets. This is what drives everything you see. So let's kind of break this down a little bit more. I'm sure you've kind of know this mantra about trading, that for every buyer there is a seller. In the exchange-based market, for every buyer there is a seller, and for every seller there is a buyer. Now, what you've essentially got is two prices for both buyers and sellers. You've got the bid and the offer. And what you see here is the bid and the offer for the S&P. So right now we're seeing the bid at 1500.75, the offer at 1501. And basically what you're doing here as a trader is, if you want to buy the market, you're bidding the market. You bid to buy, you offer to sell, or you hit the ask, which is another name for the offer. So you bid to buy, you offer to sell. You bid to buy, you offer to sell. Very, very straightforward, very, very simple. So anyone that wants to buy the market is bidding, anyone that wants to sell the market is offering. And the difference between the two is called the spread. So that's a quick little intro there. So let's kind of break this down even more. Understanding order flow, I'm sure everyone here has seen the depth of the market or the dome. And this is probably where the ladder where you're placing all of your trades. The bid is, let's get a little marker up. That's working. Let's change the color a little bit. So the bid is the price that you see here. The offer is the price just above. And the last price is the price here in yellow, the last price that was traded. So these are all the buy trades. So just a bit more depth here. So this is the best bid, and this is the depth of bid. This is the best offer, and this is the depth of offers. So the best offer is the lowest price that anyone is willing to offer their contracts to sell. So these are guys that are sitting there waiting to sell, that want to get out, and this is, or I'll go short, this is the best price that they're willing to offer. So these 1,056 contracts are the best offer that's available on the sell side, and the best bid is 463. These are the people that are willing to pay the highest amount for this particular instrument. So it's 463 contracts there. That's the best bid. And this is the depth of bid. These are all the contracts waiting at this particular price point, and the depth of offers is all the contracts waiting on the sell side on those price points. So guys, I hope that makes some sense there. This is pretty basic stuff. Give me some yeses if you're with me so far. Okay, so now this is where things start getting a little bit interesting. I'm surprised at how many people just don't know the difference between bid and offers and how that whole thing works. When you sell in an exchange-based market, you're selling, right? So the bids are all buyers waiting there with their 10 contracts in their hands saying, you know, I want to buy at this price if they're using limit orders. When you sell, you're placing your order on the sell side, but you're selling to a buyer. So you're selling into the bid and you're buying into the offers. Does that make sense, guys? So when you're selling into the bid, you're selling to the buyers, and when you're buying into the offers. You're buying from the sellers. All right, guys, excellent, good stuff. Good to see everyone's with me. Now, it's this marriage between buyers, people on the bid, and sellers that equals order flow. So that, what you saw there, where you're selling into the bid and you're buying into the offers, result in this, result in the flow of orders. So all of these transactions that you see here are as a result of someone selling, someone placing an offer and then selling that offer into the bid, placing a bid, bidding, and going into the offers. That's the relationship that you're seeing there. That's the accumulation of what you're seeing here, and it results in the flow of orders. So let's just do a little exercise just to kind of work on this some more. So we've got price here trading at 1500 spot 75. To move price down one handle to 1500 spot 50, how many contracts would we need to sell into the bid? That's a question for my team. Excellent, 463. Absolutely, guys. That is correct, Amondo. So 463 contracts sold into the bid would move price down by one handle. Okay, so now let's get a little bit more advanced. To move price down to 1499 spot 50, this is a big mathematical equation. How many contracts will we need to sell? I won't hassle you guys with that, but obviously it's going to be 9,050 to move it down to that price. And that's, with all things being equal and nothing else changing in terms of the placement of orders. And that's essentially what's happening here. You're you're basically, to move price down a certain level, you have to fulfill all of these guys waiting here with these orders. You have to buy all of these guys out or sell all of these guys out in order to do so. So does that make sense, guys? Are you with me? Give me some yeses just to let me know everyone's with me. Okay, excellent. So what is tape reading? What is order flow analysis? Well, you basically did some of it just there. That is the premise behind tape reading. That's the premise behind order flow analysis. You're basically looking at the cumulative action that's taking place on the bid and on the ask, and what's happening in the market in the relationship between the bid and the ask, or what's known as the offer. And what you're essentially doing is analyzing the rate, the size of orders at any given point in time by looking at the time in sales or the order flow, and you're watching these orders assimilate on the dome. You're seeing how these orders are absorbed, how these orders are taken in by the market. And this is giving you confirmation of market inflection points. This relationship between the bid and the ask is what's helping you understand what's going on in the market, understand how price is likely to be moved because of this relationship between buyers and sellers. Okay, so the problem for traders is this. Order flow and tape reading is a powerful tool. It's an incredibly powerful tool because what you're seeing is what's actually happening in the market. This is not a derivative. This is not an indicator like stochastics or RSI or whatever it is. This is what's actually happening in the market. These are the real orders that individuals, banks, firms, whoever it might be, are placing. And it's what's actually happening, but there's a lot of information there to absorb. There's a lot of information to work through. And if you're looking at your charts and you're looking at this information and all sorts of things, it's a lot for your mind to absorb and work with. And the mind can only focus on a small amount of visual stimuli at any given point in time. So tape reading, in essence, and order flow reading is a difficult task if you're new to it. It takes years of refinement to learn. Our kind of mission, as it were, we talked earlier on about the pit and this advantage that traders in the pit would have because they would work together and they would follow the big traders, right? Did that make sense, guys, when I explained that earlier on in the presentation? Give me some yeses if you're with me. If you were able to follow the big traders in the pit, you would basically make money hand over fist, right? And this kind of pit noise, as it were, where these guys are screaming, their buys after following the big trader as a herd, is something called pit noise, and it's something that people listen to. But obviously, with the pits dying, it's not as effective. But basically, what you listen to is the escalating buying or selling in the pit, and it gave you an audible indication of what was happening in the market, what was going on, and these guys would just pack in like a herd and follow each other. Well, with the change in the markets and the electronic changes that we've seen, what we tried to do, our little mission, was to kind of create pit noise for a digital age, right? Using the real underlying information of what's happening, which is the order flow, which we've just been going through, using that information to provide an edge. And what we did was pay attention to the size of orders, the rate of orders, and the relationship between the two, because you can have 1,000 one lot trades in the space of 3 seconds, or you could have 100 lot trade in a minute, which is going to have more impact on the market. Those 1,000 one lots, right? So it's the relationship between the two that's important, and obviously the volume that's generated overall. So this is what we paid attention to and what we focused our attention on. So I guess the question that everyone's probably wondering now is, what does order flow sound like? What am I talking about here? So if you just give me a second, I am going to load up a quick video for everyone. Hopefully you'll be able to see this in just a moment. So let's go to the next page. So we're talking about buyer breakout flow. So if there's lots of buyers in the markets, what happens? And can everyone see this? Let's rewind. All right. So turn up your speakers, guys. Hopefully you can hear me going over. So what you're seeing now, that little clicking and popping you're hearing, is buyers, order flow entering the market, and there's a little meter with some green on it. So this is the sound of a certain level of orders hitting the market. Orders to pay attention to. And then we see a massive pop there, a sudden influx of orders there, level 4 or 5 in terms of orders. I hope the video is playing for everyone. This is the sound of order flow. And this is a visual gauge of order flow and what it looks like. So let's have another example of a break upwards. Okay, so this is another example here. So you've got price. So this is a strong amount of order flow hitting this resistance area here, and price is suddenly breaking higher through this area. So that's what you're seeing here. So this is, every time you hear the sound, so the videos are slightly sped up in bits as well, just to make sure that we don't spend about 10 minutes looking at one video. But every time you hear a sound, that's an influx of orders. You know, a flow of orders that's important. What we're talking about here is completely platform independent. This is not on a charting platform at all. This little tool here, I don't know if you can see my pointer at all. That little tool in grey that says CL, that's interpreting the order flow. So it's following order flow higher here. So let me just turn this video off. And let's go back to the slideshow. So that was buy flows. So does that make sense, guys? Did you see what was happening there? As the market was taking off, as important levels of order flow were hitting the market, it took off. And that's what you were hearing. The sound that you were hearing was when certain levels of order flow. We talked earlier on about market participants. We talked about commercial traders, proprietary traders, the big guys. When the big guys are entering the market with the size that they pack, that's what you will see. This is what you will see. You will see that level of flow hitting the markets. You will see that level of it. So let's look at some seller breakout flows. So this is selling that's taking place in the market, moving the market lower. So I'm just going to queue up this video. So hopefully this will work. There you go. Okay, so we're hitting support here now. Sell flows coming in, breaking us lower. So it's a big, strong pop there, breaking through that support area there. You know, you're seeing a constant flow of orders here. Hi Max, it's funny you say that. Day Trading Radio actually play our tool. we're good friends with those guys. They actually play our tool, and of course it's gonna be delayed about 10 seconds or whatever it is with the radio delay, but that's our tool that they play. I'm good friends with John. So this is sell flows that you're hearing here and seeing here. This is what's actually happening. Hi, Kim. Kim made a good point. The price is already showing the market. However, the price is already showing the market. That's true. It's showing you what's happening. However, you wouldn't know if this area, if we started touching this area, how would you know that there's going to be a breakout or not? You wouldn't, would you, really? Because the only way that you would know is the amount of orders hitting that area at any given point in time, and the flow that's taking place as you hit that area. You wouldn't be able to see that on your chart. You can't see that on your chart because the chart's just telling you what price is telling you, and price is only telling you what order flow is telling you. But order flow is not, you can't see the real flow of orders in price, if that makes sense. You're just seeing, you know, it's not giving you context. Oh god. Let me just move on to the next. So a good example for you now, guys, is what does order flow look like in a reversal? So I'm just going to put together, this is a relatively slow reversal here. So price has been moving down, and we've just hit a level here. You can see that we're bottoming out a little bit, and you're seeing a little small amount of buy flows coming into the markets, and you're seeing this indication. And this is basically telling you at this point, level one buying is nothing to scream, shout home about. It's not major buying. It's just telling you to pay attention. And what it means, yeah, it's a period of indecision when you see level ones and level twos up and down. But at this point is if you've got some kind of a setup, say, I don't know, stochastics, divergences, RSIs, whatever setup it is that you guys use, I'm sure for every trader that we have in here, you have a setup that you use. You have a system, a methodology that you use. If you were placing a trade and then you had information that told you, I've just taken this buy trade, buyers are coming into the market right now, or sellers are coming in against me. How powerful is that information? So I want everyone to imagine that you've just taken this trade here, you've entered at, say, let's just say 92.75. What would you want to hear coming now? You'd want to hear buyers coming into the market, right? You'd want to hear buyers taking you higher. The only thing that's ours here is this little grey box, this little black box, man. So reversal here. I've actually called this a slow reversal because it takes a little while, but what you're seeing is cumulative buying action. You're seeing it all come together. So now we're starting to see level two. So this is an increase in buy flows. So right now at this point, the rate and the size of orders are starting to increase. This is the point where people are starting to engage confirmation. So this little pops that you're seeing here, there we go, taking us even higher, level twos. So that's what we're seeing, level threes now. So you're seeing an increase in order size, you're seeing an increase in the rate of orders coming through. And there we go. So level fours, increasing rate of flow, there you go. Okay, so let's move on to the next example. Now, this is an interesting one. Okay, so just going to stop that trade. Okay, so this is what I call a capitulation reversal. Are you guys familiar with a capitulation, what it is? Give me some yeses if you are, some no's if you're not. No, yes, no, okay. Oh, all right, I'll explain what a capitulation is. All right, it's a term we had the crash in 2008. There were a few massive sell-off days, absolutely huge, nearly 1,000 points down on the Dow. That's what you describe as a capitulation. It's strong selling with massive volume. It's strong selling with massive volume. So it's basically the people that are panicking. The one, they're throwing their toys out of the pram, going absolutely nuts, just trying to get out of everything. That's called capitulation. And capitulations have a major tendency to be bottoms in markets. They have a major tendency to be bottoms in markets. I remember back in the crash massive down day, and I use that down day as a day to purchase silver. It's a massive down day, big volume, and I think silver was trading at something ridiculous like $9.89, something like that. And I bought quite a bit of silver at that time. I'm still holding it. It's not doing as well as it was a few months ago, but you know, that's an idea of capitulation. It's a panic selling. So this is on a higher time frame. We're talking about on the daily time frame. However, you also see capitulation in intraday trading. So throughout the day, you might see some form of capitulation, and this is when you see this big move, and it's followed by a reversal. So let me just give you an example of what I'm talking about here, and it's really exhaustive power selling that results from stops being taken out, that results from traders that are trying to catch the bottom of a move, and this type of thing. So let me give you an example here. Actually, is that the video I wanted? Let me see. Sorry guys, this is the video I wanted. I hope everyone can see this. So you're seeing we've got a strong downtrend here. Can everyone see it? Give me a yes. There is completely red. We've got level 9s, strong selling, a strong downtrend. It's going all the way down. All you hear is selling sound, selling sound. This is the sound from this support area here. The video kind of, it's sped up a little bit here because we're going to sideways action. But what you saw here, this last burst, was stops being taken out. Was the people that were trying to catch this bottom. All of the action that you see here, and I'm going to rewind just a little bit. All of the action that you're seeing here is panic. It's just crazy, absolute mad panic, and that's what you're seeing when you see level 10s, level 9s. When you see these lower levels, like level 1, level 2, that kind of selling or buying can be sustained. It's when you see this extreme, it's going up a little bit, it's going down a little bit. This isn't a sign of accumulation, right? Everyone, I'm sure, is familiar with accumulation and a reversal taking place. So this is the big shots, the big money accumulating, and then you would follow this information here. So now you're hearing some buys coming in. Can everyone hear that, guys? That little faint clicking, which is the sound of buying. So this is a reversal going through its paces here. This is a reversal going through its paces here. So you've got some selling, taking things lower, and there we go. There's the confirmation. So you're seeing an increase in buying behavior. You're seeing an increase in buy flows. You're seeing an increase and taking you higher there. So I'll just let this run. Irem, the audio is subtle, yeah. The difference is, but I think Greg in the room mentioned that he uses it. You get used to it after a while, and it actually the subtlety. But he'll be able to speak for himself. So this is like a reversal. You saw capitulation. You saw absolutely crazy, insane selling, and that is signifying, oh, this is likely to come to an end. And then you see confirmation of a reversal to the other side. There There you go, guys. Yeah, Craig, that's a great point, and that's something that I'll kind of go on to here as well. So this is basically tick strike. This is what you've been hearing. It's completely platform independent. It's this little. These are the meters that we offer, and this is the software itself. So there's no charting package that goes with this. It works completely separately to all charting packages. So it can work with any package. If you're using NT, NinjaTrader, or TradeStation, MT4, whatever it might be. So what tick strike does is basically turn this information, order flow information, into sound and into something quantifiable and objective. Something quantifiable and objective. Now, it's all about adapting to changing market environments, increasing volume, decreasing volume. The software changes and evolves with what the market's doing at any given point in time. And a good time to use it is now, because we're in a market that's incredibly volatile, that's constantly, there's always some kind of new drama, even though things are apparently getting fixed now, but there's always something going on. Now, Greg made an interesting point about how it wakes you up to when the market's happening. It's a great tool for finding volatility. Volatility for a pro trader is profit. We're all looking for volatility. We're all looking for markets to make moves that we can jump on and that we can trade. Volatility is an opportunity for profit, and it alerts. If anything, it will alert you to when the most important players in the market are playing their hand. It keeps you out of the chop, and it alerts you to when the market is actually moving. Does that make sense, guys? Give me some yeses in the chat. From that little demonstration that I kind of did there of order flow, you heard and you saw it. It gives you that information of what the market's doing, how the market's moving. It only kind of sounds when there's order flow worth paying attention to. It helps you avoid the slow, choppy markets. Another key thing is a lot of traders have that itchy trigger finger, and that example of that reversal that we showed earlier on, you saw it kind of market move sideways. I bet there were many instances there where you guys or myself would have jumped in because you're thinking the market's moving, it's got to be doing something. What's important is to pay attention to order flow, to when the big orders are hitting the markets at a rate that's usable, that's workable, and this increases this increases your focus as a trader. Trade management. Now, guys, let's kind of work through an example together here. Now, I want everyone to imagine that you've entered a long trade, right? So you've seen an opportunity, and you want the market to move in your direction, right? So you're hearing some buying sound coming in. If you had entered that long and you're hearing buying sound, what are you going to do? That's a question to the room. What are you going to do? So you've entered a long, you're hearing that buying sound, that tick, 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 tick. What are you going to do? Max, exactly. You're going to hold the long. Simple, right? Objective information. Now, you've taken this long, and you hear the selling sound. What are you going to do then? You've taken it long, and you're hearing a selling sound with some impact against you. What are you going to do? You can either place a stop, you can get out. There's a variety of things you can do. Now, what are you doing here? Think. You're hearing the selling sound against you. What are you doing? You're cutting it short. Does that make sense, guys? That saying is such an old saying. But very few people actually follow that. Very few traders actually follow that, because the thing about trading is it has a lack of objectivity sometimes. Because you need a slap on the face to say, all right, get out of here now, get out of this now, and that sound, being able to hear order flow, being able to hear hundreds of traders going against you, is that slap in the face. Does that make sense, guys? Give me some yeses. Give me some yeses if you're with me. Excellent, excellent. So it's a great tool for letting your trade run, going with the trade. It's a great tool for stop management. These are just ways to use it. It's a great tool for just looking out for a volatile market. For paying attention to a market when the big players are in town, when the big players are there. All right, there are some traders that use the tool for trade initiation. Personally, I'm not a fan of this for the kind of market we're in now. If the market was incredibly volatile, if the market was going insane, like in 2008, when we first developed this tool, it was 2006, 2007. And it wasn't a software like this. It was an indicator that we used, on our charts as a tool. And then very recently has it become this software. But in the crash of 2008, it was just absolutely blindingly amazing, because you would see these massive long moves with, huge volume, huge flow, and it would just be going on all day long. And it was literally a case of you hear selling, you sold. You hold on to it until the buying kicked in. That's how powerful it was back in those days. So it was an incredibly, incredibly powerful tool in that sense. This is going to sound weird. One video that I showed you, do you guys remember the capitulation video that I showed you earlier on? Give me some yeses. You remember that, right? Now, I call this tick strike fading, where you're trading against tick strike. I saw like that black bar was completely red. It was level 9 selling. It's that I would describe as capitulation. Obviously, it depends on the market. If there's some major news event moving the market, it will stay level 9 for a while, because there's just a massive amount of orders moving the market at that time. However, capitulation, that massive amount of selling, it just can't be sustained, and reversals usually follow. So this powerful selling, these stops being taken out, offer a great opportunity to look for the markets going in the opposite direction. In low volatility range bound environments, you'll hear a little pop up when you get to the top, which is like, so you'll hear a little click when you get to the top of the range, and you'll hear a little pop when you get to the bottom of the range. These are people looking for a breakout. These are people seeking a breakout, and they're getting sucked in, and the market reverses against them. So you can use this type of, if you're in a range bound environment, you can hear when, I call them the suckers, are coming into the market, and you can trade against them. Does that make some sense, guys? This sounds a little bit, I don't know, it sounds counterintuitive, but does that make sense? How you can use the tool, how you can actually trade against the tool. All right, great stuff. Everyone's with me. So, one way I'm sure is very, very obvious to everyone is breakouts. Give me some yeses, guys. Is it obvious how you would use this type of information in a breakout? Absolutely. Lots of yeses coming through. Great stuff, guys. It is very, very obvious. When you're seeing a breakout from a resistance area, you want to hear the influx of buyers. You want to hear buyers coming into the markets. Identifying fake outs. Fake outs are a result of order flow. So there's just not enough orders, or there's a capitulation level of orders that has taken place, and it's just a pop that you're seeing, and the market reverses the other way. If you knew what was happening in order flow, if you could hear order flow, you would have that information. You would know what's happening there. This is just another extension of trade management, trade confirmation. So guys, everyone here, if you would take a quick moment to describe your setup, if you guys wouldn't mind doing that, what do you guys look for as a setup? Are there any stochastics traders in, any RSI guys? Do you look at candlesticks? Describe your kind of methodology, as it were, in just a couple of words. Nothing too heavy. Any candlestick traders in here? Any fib traders? Price action, volume, all these types of things. All right, so lots of you guys mentioning things here. The TTM squeeze, that's a beautiful example there. Okay, so all of these setups, there is a certain thing that you're looking for, right? You're looking for something to place your order. Now, let's say, for example, you've got your setup. It might be the TTM squeeze, which someone mentioned, or it might be a candlestick pattern, and this has given you a long signal. Now, the long signal that your system's given, what you need to confirm that is you need orders on your side. You need people to be buying. Does that make sense, guys? Give me some yeses. If you've got a long signal from your system, you need orders. You need buyers coming in. What if you could hear the buyers coming in, confirming that trade? Would you hold on to it? You'd hold on to it, right? Absolutely, absolutely. So it's that simple, guys. It's that simple. So this is the value of what we provide. You can audibly, visually see and hear order flow. You can follow the market moving participants. We talked about them earlier on. You know, these are the guys in institutions, in commercial businesses, in prop firms. These are the big guys. These are the guys that move the market. We're following them. You know, you can quantify and understand momentum. You can be alert to changes in the market. You can let your winners run, and you can cut your losers short. You can adapt flows. For any of you guys that have used pit noise, this is the new age. This is digital pit noise. This is the next step in any direction. And we just talked about the methods that you guys use. A lot of you guys mentioned, you know, the TTM squeeze, fibs, you know, whatever it might be, candlesticks. You could integrate order flow into any day trading method, any method at all. You can integrate this type of information. Our software is completely standalone. It works with any charting platform. It's got its own data feed. You don't need to buy a separate data feed. It's a visual and audible gauge or order flow. It's objective. It's quantifiable. You guys saw those videos. You knew what was going on. Right, guys? Give me some yeses. Did you know what was going on? Could you see and hear the buy flows? Could you see that happening in front of you? We've got an amazing support staff. This is the pricing of our products for 6 months. It's about $200. For 6 months of all markets, it's $600. We've got a great special offer for everyone here today using the URL www.tickstrike.com. You get a 7-day free trial. So you've got 7 days to try it out. You can get 6 months of a single instrument. All the instruments that we cover at the moment are here. We've got a lot more on the way. So you can get 6 months for $97, which is 50% off. So that's for the whole 6 month period, not a month, the whole period. And you get 6 months of 10 markets for $297. I'd recommend, you know, if you trade it more than one market, getting the $297 package. So these are all the markets we cover: the euro, the pound, the yen, Aussie, euro, JPY. And guys, if there's any questions, feel free to ask away. I'm happy to answer any questions you guys have. I know there were a bunch as we were going through, but it's just difficult to kind of do the presentation and, you know, work through everything. So this is the offer. Yeah, we've got regular steps coming as well. I mean, Tony, our plan is to increase TickStrike to over 200 instruments. We're just working on that right now. Hi KP, you are locked and loaded for life on this price. So in 6 months' time, when it comes to your subscription renewal, this is the price for the life of your subscription. You need the promo code ALERT7, guys. That's very important. I always forget to say that. Promo code ALERT7. Go to the website, tickstrike.com/TP. Choose, you know, 10 markets. Type in the promo code and, you know, test this out for 7 days. See if it's for you. No one is charged today. It's only at the end of the 7 days. 7 days. See if it fits into your trading style. Hi Ben, yeah, the data comes through our data feed. You do not need your own data feed. It's all inclusive. This package, this price covers everything. Everything. All right, let's try and get through some of these questions. Market makers are usually fake orders, aren't they? Bobber TP. What you're seeing, the information that we use, the order flow that you hear, that is order flow information from orders that have actually gone through the exchange. So there's no fake orders. These are orders that have actually taken place. So on the dome, on the depth of market, those are orders that haven't been filled. You can spoof and fake those orders, but you can't fake what's going through the actual exchange. Hi David, in the current version you can't choose the sound for buying and selling. We like the subtle difference, but the new version, which is going to be coming out soon, has that. So if you kind of purchase now, give it a trial, see if it's for you, you'll have access to that new version. Hi Scott, the currency crosses and the futures. The currency crosses work with the futures and they work with the spot FX. The reason why is because they move in the same way. They're highly correlated because obviously the futures is a derivative of the spot FX, but you can use both and it will give you the same information and it's good quality information. Oh wow, there's so many questions I didn't even see. Let me see, do I have to pick the market? Hi Robert, you can change. But it's advisable if you want more than one market to buy the 10 markets package because it's just such a great deal. It works out really well for you. Hi Tony, you can have the alerts on your desktop. Yes, you can. So that little software thing that you saw, shall I go back to it? You would have that platform on your package. Do you have a backup server? Rudu, we have, I think it's 9 or 10 backup servers. So every time, we have hundreds of people using this now. Every time, if there's an outage, it switches over to another server. These other servers are hosted by different companies, in different countries. So we have backups for our backups for our backups. Hi Marlon, we have both data for the FX and the futures. The reason why we have the FX is, like I said at the start, is FX is a difficult one in the sense that it's not centralized. There's multiple places where orders are placed for FX. What we do is gather order flow data from different brokerages, and we use that data to create the FX flow. And the FX and the futures flow, they're pretty comparable. They're pretty spot on with each other. So yes, you can use the FX flow and it will give you the information that you want. I mean, the euro is one of the flow products. Oh wow, these are non-stop questions. Hi Nick. Where is the new version? This is an even newer version. We did have a version that came out a month or so ago, but the new version, the new version, which has stocks and various other instruments, this is going to be coming out, we hope, within the next 6 weeks or so, because it's just such a massive amount of testing that goes into a product like this. It just takes the time to do that. B Hampton, approximately when we have it for stocks, we're hoping within the next 6 weeks or so. And if you buy 10 markets, you'll be able to get access to all the stocks as you want. We do have a package called All Markets, which is included in the half price, even though it's not on there. So if you did want to get access to everything, the 100+ instruments that we're going to be having in time, I'd recommend purchasing that. Kingsley, how many PCs can you install? You can install this on as many PCs as you want. However, you can only run it on one PC at a time. Robert, do we plan on having the DAX? Yes, we do. We will have the DAX. Do we support Android tablets? We don't have a tablet version yet, but that is something that we're working on. Hi Dad, on the site it says 101. Still after that. If you've put the promo code in correctly, it shouldn't be a problem. If it does go through as 191, you'll only be charged at the end of the week, so we can check later on today after the transaction just to make sure that there's no issue there, Dan. So don't worry about it at all. We will definitely look after you and make sure that you get the special price. I don't. Stanley, can you track? Absolutely, we can track individuals. We can track anything that has an order flow, we can track. Anything that moves, we can track. So absolutely. The reason why we've been taking such a while in getting out new instruments is because there's just so much work that goes into calibrating the instrument itself. So we have to go through a process of calibrating the instrument, the order flow, working out what level 1 should be, what level 2 should be, this type of thing to really make it work. And then it has to adapt for volatility and all this type of stuff. IKP, this is completely platform independent. You do not need charting for this. It works completely by itself. So you could not have charts at all and it would work. You don't need Ninja or TradeStation or whatever. Hi, Tun. 7 days is 7 days. So it's seven days, including the weekend. Hi, Rudy. If you purchased today, no, that really complicates things up for us, and we'd rather not have that level of complication. I mean, look, it's a great price. If you want to purchase a single instrument or 10 markets, you'll be doing really well. It's half our normal list price. Kingsley, how many PC laptops can I install even if I use one? You can install it on as many as you need to, but it's only what will happen is if you try and use it on two laptops at the same time, it'll cut off, but you can install it as many as you need to. So if you've got one for work, etc. Lots of questions, guys. Good questions coming through. If there's no more questions, I think we're going to start wrapping things up. Okay. KP, any customization? Not that I can think of. The key thing to think of it like this. You've got a method that you use for your trading. You've got a system. You've got a way of doing things. Just use this as part of your method to give you an extra eye on the market, to give you an extra view of the market. All right, guys. Thank you so much for your time today. I really appreciate it. It's been lots of fun talking to you guys and kind of hearing all your little comments and thoughts and this type of thing. I'm going to leave you with the video in the background. No worries, guys. As a last thought, so it's tickstripe.com/TP. To get the special, the promo code is alert7. Thank you very much, guys.
All right, great. Thank you, Amar. We appreciate you being here and doing an outstanding job as usual. Ed Smith, you love the Trading Pub. We love you too. I hope that you guys enjoyed that event and learned a lot. I thought it was very educational, and we'll get a write-up posted on the event along with a copy of the recording emailed out to everybody. Glenn, I hope you have a wonderful, I guess, good morning to you. I know it's bright and early where you are, so we appreciate you. And Keith, thanks for joining us, everyone. When we shut the room down here, you want to go ahead, I'm about to shut the room down, but you want to go ahead and grab that link and write this down. The promo code is alert7. So again, that gives you the 50% discount basically. And also keep in mind, like Amar mentioned, the discount is good if you decide to renew. So as long as you stay active with your subscription, you'll continue to stay subscribed at a 50% discount. So when we shut the room down, it'll teach you guys. We have a couple of offers for some newsletters on that you're welcome to take a look at, as well as a link. Our next event will be Saturday. We're having a big half-day class on Saturday. We look forward to seeing you guys here. We'll probably have about 1,000 folks tuning in, so look forward to that. But again, Amar, thanks again. Great job. You guys see the tick strike video playing right now. You hear that little click. That's what you'll be hearing. It helps you understand the order flow in the market, how strong a move is, and whether or not, I think really it's powerful in spotting true versus false breakouts, and seeing if there's any volume behind the moves. So, Lena, Saturday will be here. Here's the link if you're interested in Saturday. And when we shut the room down, it'll give you an opportunity to register for that as well. So, last call here on the Tick Strike offer, tickstrike.com/TP. You want to save that link. And the promo code, if you want to write this down, it's alert7. So we'll give you guys a couple seconds to write that down, and see you on the flip side. Thanks, everyone.